going on, Sniper Gang? Welcome back to the channel. Just wanted to actually bring you guys a teach call that I did with my students. On this call, we talked about how I like to find liquidity in the market, and the reason why I wanted to bring this to you guys on the YouTube channel was because I see a lot of newer traders or learning, aspiring traders worried about how to find liquidity or worried about bank levels and all types of stuff like that. So go ahead and check out this tool. I hope you guys enjoy it. Make sure you like and subscribe. Check it out.
We win, and please don't hate it.
Yeah, yeah, yeah. I feel great. I feel great. I feel amazing. Before.
All right, cool. So today we're really just gonna talk about again the volume profile tool. Now this is gonna be good for helping find liquidity inside of the market. A lot of people struggle or feel like they need to know magical, levels or interbank type stuff, and it's like, again, guys, like that helps. It definitely helps. I'm not saying it doesn't, but unless you're on Wall Street, you're just not gonna get access to that information. And anybody who's sitting here telling you that they're teaching you from a retail perspective or on the retail side of things that they're teaching you interbank methods and all that, they're no. Um, so let's go ahead and focus on this volume profile tool. Now, really quickly, one thing that I kind of want to just point out and talk about is really what it is. So I use TradingView for this, right? You guys can see up here, I'm on TradingView. I do use this on more than really. I only trade euro and gold, but I'm able to use it on both. And some people might look at you funny for using, volume profile tool on Forex or on a metals pair, but it's worked for me. So I'm gonna show you guys how I get it. Now this is what the tool looks like. Um, let me grab it. Boom, right here. So I have it saved, but you would just go into indicators and then fixed range right here under volume profile. So let me go ahead and grab it. Boom. And then once I'm gonna just draw it up here really. Oh, whoops. Actually, I don't want to do that one. I'm gonna draw it up just to kind of go over the points of it, so we can just kind of see. All right, cool. So once it's drawn up, right, and let me see if I can zoom in just a bit. Perfect. Okay, so a few things that we're gonna notice. And you can edit this to sit like way off on the side of your screen if you want. I just like having it on the actual screen because I'm trying to see the actual level where the point of control is, but we'll get into that. So when you see these little bars here, usually there is, the smaller that these horizontal lines or bars lay, what that's going to indicate is that there's less volume at those levels. And so normally what you're going to see in the market, and this is not every single time, but again, this is just right on a regular basis. When you see smaller or less volume inside of these horizontal bars, what it's going to look like from a candle perspective is you're going to see larger candles. You might even see wicks because again, this is areas where there is less volume in the market. So moving on, as the bars start to kind of get bigger, what you start to see is a lot of the times you can still see longer candles or larger candles, but a lot of the times you're going to see a lot of either small choppy candles, which is all kind of coming back to one similar area, or if you have like a big candle just kind of sitting there that pushes through, a lot of times you'll see us come up and retest the point of control. So that's kind of what these little bars on the side indicate. Um, and this long line here, this is really the bread and butter of using this tool. This is, again, like I mentioned it before, the point of control. That's what this is called, POC for short. And what this does is it literally tells us where most of the volume in the market is during, right, the period of time that we've selected. So from here to right here, this is where the most volume was sitting in the market. Now, I just kind of want you to look at, I'm going to draw this line right here, and I'm going to take off the volume profile now. And just kind of look at the way that the market moves around this line, right? We can see very clearly we've come here, boom, left support. Once they came and broke here, boom, they came and worked off the same area. 1, 2, 3 times. Once they broke down, they came right back up into the same area, boom, and retested it. Came right back, boom, came right back, boom, came right back. So it's like when you see those high areas of volume in the market, the reason why you're going to see the market keep coming back to that area is because that's where most of the orders are sitting. So whether it be them coming down here to, keep bringing price to this level to accumulate orders, or whether it be, hey, we've made our money and now we're just releasing profit, right? Or, we're selling off out of our positions, or we might be buying out of our positions, whatever, whether you're long or short. That's normally where you're going to see, or that's how you're going to see the volume translated in, these actual charts. So now let's kind of look at a little bit of the best use for this. Um, when I use this, I like to use it on the 1 hour and the 4 hour. That's not to say that it can't work on a lower or a higher time frame, but I like to use it or I like to use it on time frames that are going to give me good and strong trades. So let's find a cool little example here on gold. Let's go down to the 1 hour. So let me just move this back because it's been a pretty choppy market. So you want to find a good trending market. This is a pretty good example here. So we'll bring the tool out, right? And I'm going to take it from the high, boom, down into the low, right? So we'll start up here, boom, right into here. So, okay, so now we can see, right? There was a point of control here, meaning that there was a lot of liquidity. Most of the liquidity during this market structure push, right? They came from a lower high all the way into a lower low. So most of the liquidity that was released into the market was down here during the point of control. So now that we've got that, out of the way and we can see, let's go ahead and pull up another one. So now we'll take it from the next lower high, right, to the next lower low. And actually, you know what? I'm not even going to include this. I'm gonna take it from here down to right here to this low, because this low took out these lows and then they kind of pulled back and made another lower high. So for the sake of this, we'll use these. So let me go ahead and go from. Oops, gotta re-grab my tool. So we'll go from here, boom, right down into here. And now we can see again the volume. We can see where it's sitting. So even if we kind of draw this back, right, you can still kind of see where, but like before this strong move had happened, you can still see, okay, now once they had kind of come to this little low, they hadn't really broken structure. This is where a lot of the volume is sitting. Boom, we stretch it out a bit. Now we can see that once we got this pullback, see how the point of control moved from kind of down here, boom, right into up here. That means that now that we've included this bit of liquidity into the market, and again, this doesn't have to be, you don't have to include what already gave you, the huge runoff, right? You can literally just bring it right into that point. So boom, right into here, and you can see it. They had an old little point of control here. Boom, the point of control moves up from down here, right where we had it, and then you can get in and take a trade off of this. Now, you're gonna need to use more than just this as a confluence. And what I mean by that is, something like a zone, right? Um, something like, again, market structure, kind of like what I'm showing you right now. So where the trades are actually going to come in is you're going to have to do a few of these little examples of finding the structure. And once you do, and you find, okay, you can find the trend literally through just watching, okay, how are we moving? So look, let me take it back down to here. Boom. So if the point of control, meaning most of the volume, is moving in a downward structure, meaning that we're consistently getting lower, like this is a low, this is a lower high, Now let me pull the next market structure points. Once we get this lower high here, boom, oops. They start here, boom, they bring it right down into here. So now notice how the point of control, right, is stepping down with structure. So here we had most of it sitting here. Boom. This comes up. I feel like a lot of the liquidity was released from this sell-off. Boom. They get right down into here. They leave some, or they take profits. You see the market pull back. Boom. And then we get short again. Now they've created new structure. Now when we have the pullback up here, this is kind of my favorite way to use this when you're able to actually get a play off of an older point of control. So here, let me zoom out just a little bit. So notice how, right, I marked this one up. This was a complete back test, right? Like this isn't anything that you're going to be taking in a live market because it's already happened back here. This has already happened back here. So now once you get to this point, right, and you're pulling this structure, boom, look how the point of control is literally right at the same area as before. And what you can do with that, excuse me, is you can use it as a break and a retest. So, and again, you don't even have to have all this included. Here, I'll pull it to here before they really made the new structure. And look, it's still sitting right there at that old point of control. You see that? So once we see ourselves, right, we know that we had a lot of volume back here in the past. Now we know the market is going to start making its way back into that volume, right? Look how it gets choppy, kind of like I talked about. Boom, boom. There's a lot of orders getting executed here, right? They come right back into it. So right here, we're completely sideways in the market, right? And that's not really what you want to be using this on. Like I said, you want to be looking for the trending market. So as they start to kind of show, okay, we're making lower highs, we're making lower highs, we're making lower highs, right? This is showing to us that they don't want to come back up this way toward this volume, right? So I'm going to be looking for an area to get short again, based off of this old liquidity right here. So once they come down here and they kind of give you a good little break and retest, boom, that's perfect. So look how they break through right here. They come up and they retest it, right? They leave you some price action, and it's game on from there, right into a bigger, right, 1 hour zone. So again, that's my favorite way to use it when you can get a new level to line up with an old level, point of control wise, and then you can sit and wait for the break and retest and catch a play off of that. This right here would be what the trade opportunity looked like. And again, guys, like real easy to use. It's not any magic, but it's definitely something that's going to give you some higher time frame sets. So let's see. If you were to give yourself a good little stop, let's see how far this one went. If you just even just held it down into the zone. There we go. Boom. Solid banger, right? So that's a good way on how to use the volume profile to find liquidity inside of the market if you're struggling with that. After a while of using it, it always helps to have it pulled up, but you're just going to start to notice, like I said, when you see the area of a lot of, price accumulation or price revisits. And what I mean by that is, right, they come up in here, boom, they leave, they come right back into the same area. A lot of the times when you see that, you don't even have to have the volume tool drawn up. You're going to start to realize, okay, this means that this is where the volume is at in the market. This consolidation is usually telling us that this is where the volume is at in the market. This consolidation is telling us that there's volume in the market here. And so once you can start realizing that, then you can start, again, paying attention and using it with market structure and saying, okay, well, we're consistently making lower lows, lower highs. So let me find my opportunity to go short again, or right, vice versa. You can use it long. So really just kind of wanted to make that video for you guys so that you guys can have a good way to find liquidity in the market without, again, feeling like you need to know some Wall Street techniques. So hope you guys enjoyed it. If you guys have any questions, again, feel free to ask me. Let me know. Make sure that if you guys are watching this on YouTube, that you like and subscribe to the channel. Um, and for you guys in the academy, again, go ahead and definitely be using this tool. Send it out to me in the analysis section. and we'll get up on it.